Welcome to the Deep Dive. We're here to cut through all that noise and give you the insights you actually need to be, well, truly informed. How does a company selling plywood and paint, seemingly mundane stuff, become this surprising bellwether for the entire American economy? That's kind of the hidden story of Home Depot we're diving into today.
It is a really fascinating question. I mean, on the surface, Home Depot looks pretty straightforward, right? But our mission here at the Deep Dive, it's to take this huge stack of sources, articles, research, all our notes, and just pull out the really important nuggets for you.
Exactly. Think of it as your shortcut, especially for, American investors looking at the market, trying to understand the company inside and out.
And today, yeah, we're doing that deep dive specifically into Home Depot, ticker symbol HD, our retail giant.
We're going to peel back the layers, look at the core fundamentals, check out its dominant market position.
And really explore how those broader economic forces impact its stock, because they definitely do.
This deep dive should give you, our listener, a really solid understanding of a major player. I mean, it sits right at the intersection of retail and housing.
Right. So whether you're prepping for a meeting or just catching up, or maybe you're just super curious, we want to deliver those aha moments. We'll look at it from all angles.
Without getting buried in data.
Exactly, without feeling overwhelmed.
Okay, so let's start with just the sheer scale. For anyone less familiar, can you paint a picture? Just how vast is Home Depot?
Oh, absolutely. It's huge. Founded back in '78, it's not just a store, it's the world's largest home improvement retailer.
Wow.
Yeah, the footprint is massive. We're talking over 2,300 big warehouse-style stores across the U.S., Canada, Mexico, and the product range. Equally vast, over 100,000 items, building materials, tools, appliances, garden stuff, paint, lighting, you name it.
Yeah, they do services too, right? Like installation?
Installation, equipment rentals. It really is a one-stop shop for, the weekend DIYer and the serious professional contractor.
So what really makes them such a force? Is it just being the biggest guy on the block? Or is there something else going on?
Well, size is definitely part of it, but here's something maybe less obvious, that market dominance lets them kind of dictate terms to suppliers.
Ah, interesting.
Yeah, it gives them this subtle but pretty significant cost advantage. Few competitors, if any, can really match that. It's not just about being big, it's about using that scale to boost margins and stay competitive on price.
That's a key point.
Yeah.
Okay, and beyond pricing, you hear a lot about their focus on the pro customer. Why is that segment so critical? Lots of retailers chase individuals, right?
That's where things get really interesting. The pros, contractors, remodelers, they're more than just critical. They're like Home Depot's hidden competitive advantage, their moat.
Okay. How so?
Well, people talk about the volume they buy, sure, but the real insight. Home Depot has basically become part of their back office. They offer services, not just material.
Yeah, what kind of services?
Things like dedicated credit lines, super fast delivery right to the job site, stuff that saves pros actual time and money. It makes Home Depot almost indispensable.
Gotcha. So it's not just selling them stuff, it's integrating into their business.
Precisely. These aren't just one-off sales, they're relationships built on convenience and specialized service. That creates really high switching costs for contractors. It locks in long-term, high-value business that's frankly less jumpy when the economy wobbles.
That makes total sense. They're making themselves sticky. All right, so in a world that's always moving more online, what about their omni-channel strategy? Is it just keeping up, or is it a real advantage?
Oh, it's definitely more than just keeping pace. They've done a great job integrating the physical stores, the website, the mobile apps. It's pretty seamless.
Right.
But the leap is how they use those stores as fulfillment centers. Think buy online, pick up in-store, BOPIS, or speedy delivery.
Which is huge for bulky items.
Exactly. Pure online players can struggle with that immediate need, especially for, a bag of concrete or lumber. Home Depot turned its physical footprint into a digital asset. It's not just a separate channel, it enhances the online side.
It's clear they're really tied into how people live, how they maintain their homes. So this brings up a big question. What's the single most crucial external factor investors need to get their heads around with Home Depot?
Oh, without a doubt, it's the link to the housing market. Home sales, new construction, home values, all of it.
Right.
A busy housing market usually means more home projects, more demand for their stuff. But, and this is key because a lot of home improvement is discretionary spending.
Meaning you don't have to do it right now.
Exactly. So the company is highly sensitive to the broader economy and maybe most importantly to interest rates.
So bottom line, if mortgage rates shoot up, my plan to finally build that deck might get put on ice for a while.
That's pretty much it. If people feel financially squeezed or if borrowing costs are sky high, those big renovations, even smaller updates, often get delayed. It hits consumer confidence and spending power for home stuff directly.
Okay, let's switch gears slightly. Let's talk money, financial health. When investors look at Home Depot's numbers, what should they focus on, beyond just the headline revenue?
Good question. So obviously we look at net sales, operating income, net income. They show the overall growth and profit picture.
Standard stuff.
Right. But for a deeper insight, comparable sales growth is super important, especially in the US and for those pro customers. It tells you how much sales are growing in existing stores. That's a real health check, shows organic demand, not just opening new locations.
And what else?
An average ticket, that's the average amount each customer spends per visit. It gives you a feel for, the quality of sales and what customers are actually buying.
Margins are always huge in retail. How does Home Depot stack up there, especially given their size?
Well, retail margins are generally lower than, say, tech, right? But Home Depot's strength is the stability and efficiency of its gross and operating margins.
Because of their scale.
Yeah, scale means better buying power. And they're pretty efficient operationally, which helps control costs. Plus, their strong cash flow is vital. That's what funds reinvestment, pays dividends, buys back stock, all things shareholders like.
You mentioned the pros again. How different is their spending compared to, like, me buying paint on a Saturday? What does that tell us strategically?
It's quite different. So you've got the DIY, customers, homeowners, more sensitive to economic shifts, disposable income, that sort of thing. Then you've got the pros. Contractors, plumbers, etc. They make bigger purchases more often, and their spending is generally more stable.
Less impulse buying, more business need.
Exactly. So Home Depot's strategic focus on pros makes sense. They spend more on average, provide consistent repeat business, and they're less likely to pause a project just because of a small economic dip. They're the bedrock. And we also keep seeing their online sales grow steadily. That really underscores how well their omnichannel approach is working and contributing more to the top line.
Okay, so earnings reports come out. Everyone looks at revenue and EPS, earnings per share. Did they beat or miss expectations? But you're saying there's something even more critical than looking backwards.
Yes, absolutely. Past performance matters, of course. But the company's guidance, their forecast for future sales and earnings, that's what really sets the market's expectation for the stock going forward.
It's like their best guess of the future.
Pretty much. It's the closest thing to a crystal ball investors get. It shapes sentiment massively, especially what they say about the housing market outlook.
All right, let's pivot to the investment side. Home Depot trades at a premium valuation. What does that actually mean for an investor, and what metrics show that?
A premium valuation just means investors are often willing to pay a higher price for the stock relative to its earnings or sales. It reflects confidence, basically. Confidence in their growth prospects and reliable profits.
And we measure that with things like?
Things like the price-to-earnings ratio, or PE ratio. Tells you how much you're paying for each dollar of earnings, gives you a sense of market sentiment about future growth. We also look at price to sales, EV to EBITDA, standard valuation stuff.
And for investors looking for income, Home Depot's got a solid reputation there too, doesn't it?
Oh, absolutely. They have a very consistent history of paying dividends. And importantly, increasing those dividends over time.
That's key.
Yeah, it makes them really attractive for growth and income investors. So you look at the dividend yield, the dividend growth rate, and the payout ratio. That last one tells you if the dividend is sustainable based on earnings.
And they buy back shares too.
They do. Active share buyback programs. That reduces the total number of shares out there, which tends to boost the value of the remaining shares. Another way to return value to shareholders.
Okay, let's zoom out again. Broader economic tides. We keep coming back to the housing market. Just how deep is that connection? Existing home sales, new construction, prices, and especially mortgage rates.
The connection is profound. It's fundamental. When existing homes sell, the new owners often renovate. That's business for Home Depot.
Right. New kitchens, bathrooms.
Exactly. New construction. Obvious driver for building materials. Home prices and home equity. If people feel wealthier because their house value went up, they might be more willing to spend on improvements.
Makes sense.
But the biggest lever, especially lately, is mortgage rates. We've seen it play out. Rising rates really put the brakes on the housing market, makes it tougher to buy, sell, move, and that directly slows down demand for home improvement stuff.
And are there other consumer trends we should be watching?
Yeah, a couple of things. There's this ongoing shift or maybe balance between DIY projects and hiring professionals. Home Depot tries to serve both, of course.
Hmm.
And there's definitely growing demand for sustainable products, energy efficient upgrades, smart home tech. Those are all opportunities for Home Depot.
Even being the leader, they've got competition. Who are the main players they're up against, and how do they stay ahead?
Well, Lowe's is the obvious direct competitor, right? Head to head.
The other big box.
Yeah. But they also compete with specialized distributors that focus only on pros, like an ABC Supply or Builders First Source. And then online, you've got Amazon, Wayfair, others chipping away at specific categories like appliances or decor.
So how do they maintain their edge against all that?
It really comes back to a few things. There's sheer market dominance, that strong brand recognition, the successful omni-channel strategy that uses the stores effectively,
And the pro focus.
and that relentless focus on the pro customer. That gives them a differentiated edge that's genuinely hard for others to copy at scale.
Okay, even bigger picture now. Macroeconomics. How does something like a potential recession or just slower economic growth affect Home Depot?
Well, a slowdown or a recession definitely hits them, especially on those discretionary projects we mentioned. People pull back.
Tighten the belts.
Right. Inflation's another big one. Rising costs for lumber, materials, transportation, labor that can squeeze their margins. The big question is always, can they pass those costs on to customers without killing demand? It's a balancing act.
And interest rates, again. We know high rates hurt because of mortgages. What's the flip side? What if the Fed starts cutting rates?
Yeah, that's the potential upside. Sustained high rates depress housing. But if rates start coming down, that could really stimulate the housing market, make homes more affordable, encourage buying, selling, renovating. That would be a big positive for Home Depot.
Other factors.
Sure. Employment and wages matter. Strong job market means more consumer spending, generally. But rising wages also mean higher labor costs for Home Depot itself. And of course, supply chain stability is always in the background. Geopolitics, shipping costs, they can affect product availability and price.
Okay, so Home Depot has clear strengths, but every investment has risks. Let's talk about those potential challenges. We know the housing market sensitivity is number one.
Absolutely. That's the Achilles heel. Prolonged high mortgage rates, falling home prices, maybe just not enough houses for sale. Any of that directly hits their sales potential. It's the most critical risk, no question.
But beyond that obvious one, what's maybe a less discussed risk that investors might overlook?
That's a good one. I'd say maybe the intensity of competition from those specialized pro distributors.
Not just Lowe's.
Right. While Home Depot serves pros well, these niche players sometimes offer even deeper expertise in certain trades or maybe more tailored credit options. In a tough economy, they could potentially chip away at that really valuable pro segment.
Interesting. Okay, so that's a specific competitive threat. And of course, a general economic downturn hitting discretionary spending is always a risk.
Yep. And those cost pressures we mentioned, volatile materials, logistics, labor, those are ongoing challenges to profitability.
So intense competition on all fronts, really.
Definitely. From Lowe's to the specialists to online. And you can't forget technology and security risks either. Cybersecurity is huge with all that customer data. And making the wrong tech investments could be costly down the line. A big data breach would be terrible for trust.
But it's definitely not all doom and gloom. Home Depot has some serious internal strengths, right, that help them stay resilient. What about leadership?
No, leadership is critical. Management's vision has been key to executing that pro strategy, building out the omni-channel capabilities, and frankly, steering the ship through past economic storms.
And their operations.
Very strong. Operational efficiency, supply chain management. They use their scale incredibly well to get cost advantages, keep products flowing, manage inventory. That's a huge competitive strength.
And customer experience.
Yeah.
You know, it's funny. Every time I walk into a Home Depot, I end up buying something I didn't plan on. Is that impulse buying a big factor? Or is it mostly planned, especially for pros?
That's a great point. For DIY folks like us, yeah, impulse buys happen. Good merchandising, seasonal stuff, new gadgets. They get you.
Guilty.
But for pros, it's less impulse, more about efficiency and just knowing the stuff will be there. Their loyalty comes from having knowledgeable staff, that seamless online-offline experience, and extra services like rentals or quick pickup. Get in, get out, get back to the job site.
So reliability is key for them.
Absolutely. And to make all that work, they need good people. Talent acquisition, especially for tech and data roles, is crucial for their future. And finally, underpinning everything is just solid financial health, strong cash flow, smart capital allocation. That lets them reinvest and keep rewarding shareholders.
Okay, let's bring it all together.
Yeah.
What does this mean for you, the American investor looking at Home Depot? To recap, the core idea seems to be undeniable market leader, strong fundamentals, smart focus on the pro customer.
Inherently tied to the housing market's health and the wider economy, so it's a nuanced investment.
Right. So probably best suited for long-term investors who want a mix of growth potential and those consistent dividends.
Generally, yes, I think that's fair. You're buying a stable, dominant player, but you absolutely have to watch those external economic factors, especially anything related to housing and interest rates.
Okay, so here's a final thought for you to take away. As an investor, look beyond the spreadsheets for a second. What story is Home Depot telling about how we'll live, how we'll improve our homes in the future? Maybe think about your own home improvement habits. Do they reflect bigger trends that Home Depot is set up to capture, or maybe even influence?
We really hope this deep dive into Home Depot has been useful for you.
And if it was, please subscribe to The Deep Dive for more in-depth analyses just like this one.